Welcome back to First Issues. In a previous episode, we started talks on what it takes to list on a stock exchange. While the process is rigorous and can be quite complicated, the Botswana Stock Exchange has taken to introducing the TPD Mentorship Program to shed some light on this process. Our guest, CEO at the BSE, Thapelo Tsheole, explained that through this program, participants are provided with practical training through a comprehensive and interactive program that covers the key themes necessary to position a company to list on the BSE. Our other guest, General Manager Botswana at Seedco International Limited, Samson Ruisi, spoke on the learnings of the journey to being a listed entity. This evening, we discuss corporate finance when one wishes to announce their initial public offering. We are joined by Manu Michael, who is Senior Manager Corporate Finance at Deloitte & Touche. To open our conversation, Manu speaks of the considerations that need to be made by companies interested in going public before listing.
In terms of the key considerations which a private company needs to have in mind or prepare themselves before they decide to take the route of going public, there are quite a few number of aspects which they need to consider along the lines of financial reporting. Because being a listed company, you are required to adhere to the disclosure requirements and the financial reporting requirements of the stock exchange. Stock exchange also insists to a great deal in terms of having your corporate governance enhanced. So you are also required to adhere to certain corporate governance policies that are practiced globally. So you need to make sure you have those structures in place. There should be sufficient internal control processes to ensure that your operations are seamless and that you actually don't have too much gaps in your processes and controls. You have to ensure that you have identified your advisors, lawyers, consultants who will help you to walk you through the IPO journey. And then generally you need to have a sound business plan. You need to have an equity story, a growth story, which will help you to sell your proposition and generally your company to the public.
So how can those who wish to list their companies determine the percentage of the company to put on offer?
In terms of what percentage to dilute as a part of listing is mostly advised by the stock exchange requirements. So each of the board requires you to dilute a certain percentage. So for example, the main board in the BSE might have a higher rate of dilution than compared to a venture board or a SHPD board. So that is the bare minimum dilution that is required as a part of listing. Beyond that, it is basically up to the management of the company and the owners and the shareholders to decide what kind of an exit strategy they want and what they would want to offer to the public and what amount or value of cash you want to raise as part of listing.
So when listing, there's an investor prospectus that the listing company has to provide. So at this point, we wish to know what the components of the investor prospectus are.
So the investor prospectus is a very key document that is submitted by the the company that is going IPO. It's a legal document that is prepared by the legal advisors along with the financial advisors. It's an investing Bible. It sort of educates the investor and tells the investor the details about the offer. It also gives an overview of the kind of shares that are issued, what is the rate at which the shares are issued, what are some of the risk considerations that investor should be careful about as part of listing. It highlights details about your historical financial performance. It gives details about your profit forecast, what is your growth strategy, details about your key management positions, who holds your C-suite, and generally whatever the investor would want to know as part of listing is covered in a prospectus. So it's basically the investing document that you put across to the investor.
You know, when we're talking about IPOs and private companies and listing and what have you, there's a whole lot of jargon that comes with this conversation. And one of that jargon is a corporate finance advisory engagement process. So to the layman, that may be complicated. So perhaps at this point, you could explain what that is.
In terms of the role of a financial advisor, it's not limited to certain aspects of an IPO where you come in and do certain things and then walk off. But I would define the role of a corporate finance advisor or a financial advisor as someone who is playing an end-to-end role in the whole IPO process, helping the company transition from being a private company, holding them through the process, and finally achieving the IPO. So there are quite a lot of activities or sequence of activities that happens in an IPO process, which the corporate finance advisor will help the company walk through. It starts with evaluating your company. So basically you evaluate why you want to go public, what are the benefits that you're going to gain out of going public, how much money you want to raise, and what is it in for the company by going public. Once the evaluation stage is done, then you assess the company for its preparedness and readiness. You look to ensure whether you have the sufficient structures and procedures and processes in place to meet the requirements of a listed company. Once you have that, then you go to the execution phase. That's where you actually do the roadshows, you make investor presentations, and sort of socialize your company to the public and motivating them to invest. And then the last activity is the sustain process, which basically is an ongoing process, things that has to be done on a periodic basis or a regular basis post the IPO process or the IPO listing as well. So it's not a small process, it takes time. Normally you're looking at anywhere between 24 to 30 months for a large company to get to listing, but for smaller companies obviously the time frame will be much less. Again, it depends on the magnitude of the company and also the stock exchange in which it is intending to list. So the corporate advisory engagement is basically to ensure that you have a seamless transition, and then he or she will help you to ensure that there is a proper transition.
We continue our conversation on the journey from private to public in a follow-up episode with CEO at the Botswana Accountancy Oversight Authority, Duncan Majinda, and Ashwin Vaidyanathan, who's Head of Assurance at Grant Thornton.
In Africa, help is what we do. That is why we at FNB are relentlessly driven to provide real help to you. The passionate and courageous, the creators and the optimists. These are the entrepreneurs we support, the communities we uplift. It is because of you that real help is what we do. FNB, how can we help you?
This program was brought to you in association with First National Bank of Botswana.
FNB, how can we help you?